This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk as we take a look at what we saw in the market trade on Tuesday, we welcome in Bill Biedermann with agmarket.net. Bill, great to catch up with you, sir. How are you?
Oh, I'm doing really good. Despite a pretty negative day, I'm still standing.
Well, you know, that's the thing. We take our hits when we get them, and we take our wins when we get them. And yeah, you alluded to it, kind of a negative day across the grains and oilseeds on Tuesday. You know, it feels like there's a lot of weight on the market to start the week. Everything from the China economic news to the rains in the Western Corn Belt, et cetera. Talk to me a little bit about just what you felt was the reasoning behind the move on Tuesday. Was it one thing, or was it a combination of all of the above in the grains and oilseeds, Bill?
I think it was a combination. You had a lot of people buy the market Friday based on the idea that we were breaking out to the upside. We took out a triangular point on the corn, and on the soybeans, we had a pretty good push to new highs for the week on Friday. And, the weather forecast was still iffy at that point. Over the weekend, they verified that rain was coming, and you had those people just bail out. And on top of that, the funds are still selling, Jesse. I mean, they're still liquidating and deflating their inflationary position that they had on in such a big way. So we're still seeing that. Even today, we saw the funds sell, I believe it was 9,000 contracts of corn and something like 20,000 contracts of soybeans. So that's still going on. And this is the time of year where typically people do not like to trade the long side. And we usually put our harvest lows in between now and September. And we think it's going to happen sooner than later.
Well, I think first about the weather. We're in a weather market. Obviously, we typically are this time of year. Outside the other factors, rains in the Western Corn Belt. It feels like probably too little, too late for corn. Soybeans might have helped out beans, and I think that was reflected in Tuesday's trade. That seemed to be where the leader in our selling pressure was in that bean complex, Bill.
Yeah, I believe it was because the rains are going to help the soybeans the most. And then when you see, soybeans down 40 cents in one day, you have an exit for the door of anybody, because most people have on a little bit of both, and you probably had some margin call selling. So there was definitely some pressure on that. The thing you just said about the corn, maybe too little, too late, might be the case because, we're just starting to get people in the fields checking pollination and kernel counts and things like that. And of course, we got the Pro Farmer Tour coming up soon. Jesse, we just don't know. I mean, there's a lot of corn in some pretty critical areas, like even Illinois and Iowa. Nebraska's been hit pretty hard anyway. South Dakota, that didn't pollinate nearly as well as we thought. Missouri's another state. Southern Illinois got hit with that. Plus they got hit with flooding. So, you got a pocket over in Indianapolis area that's not a big pocket, but, they're looking at 50 to 70 bushels off normal yields. So, these pockets add up, and certainly we're a record yield is off the table. USDA admitted that, right?
Mm-hmm. Yeah.
But, the question is, do small crops get smaller?
That's a very good point. And, something as well, I've talked with a few folks about, maybe you can give your thoughts on this, that August USDA report we saw, USDA wasn't out in the fields either. I mean, a lot of it was farmer surveys. A lot of it was, digital data. So one has to wonder here, we get some of the different crop tours coming up here, the private crop tours the next month, and then that September report. What is that going to look like? What are the markets going to look like as we get to that September report? I think that's going to be a big key moving forward, Bill.
I wouldn't be surprised if we don't have our low end by then, before that time. And the reason I say that is because we're still trading a huge yield, 175.5 or something like that. And then, we're still trading in that 51 type of yield on beans. You're pushing record numbers there. And, maybe USDA is ratcheting up to what they really believe is out there. Like on, maybe they believe 190 is where we should be saying yields are, but it's all relative to demand, right? So it doesn't really matter how you look at it. The bottom line is this crop I don't think it's getting bigger. I think we've stabilized corn, what's out there. And on the beans, we're saving the beans because there was a huge percentage of the crop that was not doing well in the bean field. So, like you say, we're going to see these surveyors go out there in the next 4 weeks. That's going to make a big difference. We're going to have more information to work with. USDA is going to actually be in the field looking at this stuff in September. That's going to be the first valid report in my mind. And if it doesn't raise the yield significantly, we still have a historically very tight stock situation, and we still have a percent of stocks to use ratio that is still what we would call in the red zone, not in the green zone. And so we still need to have a lot of acres next year. And then on top of that, Jesse, I was just going to post some pictures. My daughter is in Italy for their military assignment. And they've been driving all over Germany and Italy and taking pictures of cornfields, and they're burnt up. I mean, Germany's still okay, and most of these fields are irrigated, even in Italy. But the fields down in Italy, they're brown completely. So, there's some serious problems out there that it's going to take a whole nother production cycle to fix. And so the demand's going to be there on this break. I guess if there was any message that I would give to a producer right now is, so what if it's selling off? It's not going to keep going down forever. Don't panic. But be smart. And when we get those value type rallies, maybe it's back to 650. I don't know what it is, but make sure you make some sales on those.
And that's a great point you made. Obviously the worldwide challenges we have, Europe, et cetera, you hit it on the head. I mean, they're burning up in Europe. Global production demand is going to be a big key moving forward. You made a great point at the end there. I wanted to talk a little just risk management with you, Bill. Obviously, seeing a couple days of a break here. We preach a lot on the show for producers to be smart, have a plan, put some risk protection in. So when you think risk management, looking here at the markets, maybe looking to go towards their lows here, their harvest lows, quote unquote, what would your thoughts be for maybe some risk management in corn and beans right now, Bill?
Well, yeah, it depends on where you're at on sales. Like our company, we've been, pushing people and be recommended to be at 60% sold on corn. So whether they did that or not is up to each producer. But when if we have the kind of sell-off that I kind of hope we do see here in the next few weeks, I would personally, and I'm sure our company will, say, hey, time to be buying back some of those bushels that we sold them at great prices. We spent some money on calls. We still netted out great prices. But down here, let's just say we go to the gaps in that 580 area. That would be a great place to throw some options on. I wouldn't spend a ton of money, and I'd make sure I have enough time on those options. But, you can do some structural type positions where, where you're selling options against some of the ones that you're buying to reduce the cost of those. If anybody wants some detail, we're doing all that stuff all the time. Right now, we've been selling some straddles. We're collecting 70 cents that we can add to the price of things sold. And Jesse, we don't even have any downside exposure because we collected 80 cents and spent 10 cents to buy a put to protect us. So, it's positions like that can add up. You don't have to do it on every bushel, but it definitely helps out.
Very, very true. Bill, as well, just economically, I think there's still some recession fear. Crude oil has been collapsing the last couple of days. I know that's another weight. You throw on the top of that the U.S.-China tensions over Taiwan and the Chinese economic concerns to start the week. As you look at the broader picture in the outside markets, the energies, et cetera, what are your thoughts there here as we get into the back half of August?
Definitely still negative, Jesse. I don't see with the Fed policy we have, and I've always said trade Fed policy. Don't ever fight the Fed. And I still stand by that, and I think that is in general a deflationary type of policy, higher interest rates, and working on resolving some supply issues. I don't see this thing turning around for a while, but food is a little different because it takes a production cycle to change that supply. So we've already got supply problems in the food system, and it's going to take a bigger production cycle to resolve that. Whereas with crude oil, if you can get the Saudis to pump more, you can increase supply immediately, right? So that's a whole different animal than a food production cycle.
Well, Bill, fantastic stuff as always. And of course, I know if producers have questions and they need some advice, you and the team there at agmarket.net have a lot of great resources to help them out. And it just starts with a phone call or going online, doesn't it?
Yeah, you bet. You can just go to the agmarket.net website. And if you go to Ag Intel, there's a sign-up page. You can get like 30 days of our information free, or just give us a call at 844-4AG-MARKET. That's MRKT.
Bill, always a pleasure, sir. Thanks for the time here on Market Talk today. Have a great week, and we'll talk to you again real soon.
Yeah, have fun at the farm shows.
Thank you, Bill. Bill Biedermann with agmarket.net joining us today here on Market Talk. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.